Welcome back to the channel, everyone. I'm so excited you're here. Today's video is powered by NuTax Service. We're a team dedicated to helping you navigate the scary legal and tax stuff so you can actually enjoy the life you're building. Today, we are doing a deep dive masterclass on trusts. We're covering everything from the why to the how, the secret privacy tips like using a P.O. box, and the exact steps to get your paperwork notarized and official. By the end of this video, you're going to have a roadmap. So, grab a notebook, get comfortable, and let's get into why NuTax Service believes a trust is the ultimate boss move for your finances. Okay, let's start with the big question. Why can't I just have a will? I hear this all the time. People think a will is the gold standard. Moreover, they think it's the end-all be-all for when they pass away. But here's the reality. A will is essentially a letter to a judge. It requires the court to get involved to prove it's real. This process is called probate. And let me tell you, probate is a nightmare. It is public, it is expensive, and it is incredibly slow. Furthermore, because it's a public court process, anyone can look up exactly what you owned and who you left it to. If you value your privacy, a will is your worst enemy. Imagine your family is grieving, and instead of being able to access the funds they need for the mortgage or your final expenses, they have to hire a lawyer and wait 12 to 18 months for a judge to sign off. Consequently, your hard-earned assets are being eaten away by court fees and attorney bills before your loved ones see a dime. A trust, on the other hand, is like a private contract. It doesn't go to court. It stays in the family. It's fast, it's silent, and it's seamless. That being said, the benefits don't just start when you pass away, they start the moment you sign the papers. Now, before we get into the how-to, we need to clear up a major point of confusion. Not all trusts are created equal. At NuTax Service, we usually start our clients with a revocable living trust. However, you might have heard of irrevocable trusts and wondered if that's the better play. Think of a revocable trust as a flexible bucket. You hold the handle, you can change the rules, and if you wake up tomorrow and decide you want to dissolve the whole thing, you can. It's perfect for privacy and avoiding probate. In contrast, an irrevocable trust is like a vault. Once you put assets in there, they are technically no longer yours. You can't just take them back out easily. Why would anyone do that? Well, furthermore, irrevocable trusts are the ultimate shield against lawsuits and massive estate taxes. If you're in a high-risk profession, like a doctor or a developer, this might be your best friend. Nevertheless, for the average person building wealth, the revocable trust offers the perfect balance of control and protection. We'll help you decide which one fits your specific tax bracket. So, what actually is a trust? Let's break it down in plain English. Think of a trust as a legal bucket. Usually, you are holding your assets, your house, your car, your savings in your own two hands. If you drop them, or if something happens to you, those things fall to the floor and the court has to pick them up. When you create a trust with a team like NuTax Service, you're creating that bucket. You place your assets inside the bucket. You are still the one holding the handle. You can put things in, take things out, and do whatever you want with them. However, technically, the bucket owns the assets, not you personally. There are three main roles you need to know. 1. The grantor, that's you, you're the boss. You created the bucket. 2. The trustee, this is the person who manages the bucket. Again, while you're alive and healthy, this is usually you. 3. The beneficiary, these are the people who get to enjoy the stuff inside the bucket later on. Now, let's talk about something the wealthy do that the average person doesn't. Privacy strategy. This is a huge part of what we focus on at NuTax Service. When you set up a trust, it becomes a legal entity. Most people just use their home address for everything. However, if you want to keep your life private and keep your name off of public databases where scammers and creditors can find you, you need to be smarter. This is where the P.O. box, or a private mailbox, PMB, comes in. When we draft your trust documents, we often recommend using a professional mailing address instead of your physical front door. Why? Because when your trust buys a house or opens a bank account, that address is what shows up on the public record. Furthermore, using a P.O. box creates a layer of anonymity. It makes it much harder for someone to find out where you actually sleep at night just by looking up your property taxes. Additionally, it keeps your mail organized. All your trust business goes to one secure location. It's a small step, but it's a mature, high-level way to handle your business. It says, I'm not just playing house, I'm running an estate. Moreover, let's talk about the money part that gets people really excited: taxes. One of the biggest reasons people come to NuTax Service for a trust is something called the step-up in basis. Let's say you bought a house for $200,000 20 years ago, and now it's worth $800,000. If you sell it today, you're paying taxes on that $600,000 gain. However, if that house is in a properly structured trust and you pass it down to your kids, their basis, the starting price, resets to $800,000. If they sell it immediately, they pay zero in capital gains tax. Consequently, you are literally saving your family hundreds of thousands of dollars in taxes just by having the right bucket. Additionally, if you own a business, a trust can help manage how that business is taxed when it changes hands. It's not just about protection, it's about massive wealth preservation. I know this sounds like a lot of moving parts, so let's walk through the exact process we use at NuTax Service to get your trust from an idea to a legal reality. It's a 4-step flow. Step 1, the asset audit. You need to sit down and list everything, and I mean everything: your house, your jewelry, your crypto wallets, your business LLCs, and even your digital assets. We need to know what's going into the bucket. Step 2, the decision phase. This is where you decide who you trust. Who is your successor trustee? This is the person who takes over the handle of the bucket if you get sick or pass away. Moreover, you need to decide how your beneficiaries get their inheritance. Do they get it all at once? Or do they get it in stages, like a bit at age 25, more at 30? This prevents them from blowing it all on a Ferrari the week after you're gone. Step 3, the drafting. This is where the legal magic happens. Our team at NuTax Service ensures the language is airtight. We use transition words in our legal docs too. We make sure that if A happens, then B is the result. We leave zero room for interpretation by a judge. Step 4, the execution. This is the big day. This is when the documents are finalized. But remember, a trust isn't valid just because you like the draft. You have to sign it, and you have to do it the right way. This is the part where people usually get stuck. You have your final trust document, and whether yours is a concise 15 pages or a comprehensive, detailed agreement, the next step is what makes it real. You have to get it notarized. A notary public is basically a legal witness. You'll go to a bank, a UPS store, or have a mobile notary come to your house. You'll show your ID, and you'll sign the certification of trust and the trust agreement in front of them. Consequently, their seal proves to the world that this is a legitimate document. Without that seal, your trust is just a stack of paper. However, here's the biggest mistake I see. People get the trust notarized, they put it in a safe, and they think they're done. They are not. Remember the bucket? You still have to put the stuff in the bucket. This is called funding the trust. You have to go to your bank and change the name on your account from Sarah Smith to the Sarah Smith Revocable Trust. You have to file a quitclaim deed to move your house into the trust. Furthermore, if you don't fund it, the trust is empty and your assets will still end up in probate. NuTax Service stays with you through this entire process to make sure the funding actually happens. So let's talk about you. Do you actually need this right now? Let's look at a few scenarios. If you are a homeowner, the answer is 100% yes. Real estate is the #1 thing that gets stuck in probate. Moreover, if you are a business owner, you need a trust to ensure your business can keep running if you're not there to sign the checks. If you're a parent, this is non-negotiable. A trust allows you to appoint a guardian for your kids and make sure the money is managed by someone you trust until they are old enough to handle it. That being said, even if you're single and just starting out, a living trust is vital because it includes a power of attorney. If you get into a car accident and are in a coma, who is going to pay your rent? Who is going to talk to your doctors? Your trustee can do that for you instantly. In short, if you have more than $50,000 in assets or you have people who count on you, you've outgrown a will. You're in trust territory now. Now, I want to pivot specifically to my entrepreneurs out there. If you own an LLC, a corporation, or even a solo practice, your business is likely your most valuable asset. However, most business owners forget that their business is also an asset that can get stuck in probate. Imagine you are the face and the brain of your company. If something happens to you and your business isn't in a trust, the courts might have to freeze your accounts. Employees don't get paid, vendors get ghosted, and your hard-earned reputation crumbles while the judge looks for a will. Moreover, if you have partners, your family might end up owning your shares, and your partners might not want to go into business with your spouse or your kids. It creates a mess. Furthermore, when we work with business owners at NuTax Service, we focus on succession planning. By moving your LLC membership interests into the trust, your successor trustee can step in and keep the lights on immediately. There is no gap in leadership. Additionally, we can structure the trust to work with your buy-sell agreements. This ensures that if you pass away, your family gets a fair cash buyout for your shares, and the company stays with the people who know how to run it. Consequently, a trust is essentially the insurance policy for your legacy. It ensures that the business you built doesn't die with you. It stays professional, it stays private, and most importantly, it stays profitable for the people you love. I know I've been throwing a lot of terminology at you. Therefore, I want to pause for a second and give you a cheat sheet. If you're taking notes, this is the part you want to highlight. At NuTax Service, we believe that the more you understand the language, the more power you have over your money. 1. Grantor or settler. That's you. You're the one who calls the shots and creates the strategy. 2. Successor. Trustee. This is your backup QB. If you can't run the team anymore, this person steps in to make sure your bills are paid and your assets are distributed according to your rules. 3. Pour over will. This is a secret weapon we include in our packages. It's a special kind of will that says, if I forgot to put anything in my trust bucket before I died, please pour it into the trust now. It's your safety net. 4. Schedule A. This is literally the inventory list of your trust. It's the piece of paper that says, here is the house, here is the car, and here is the bank account that belongs to the trust. 5. Spendthrift clause. This is a big one for parents. In addition, it's a rule in your trust that prevents your kids, the beneficiaries, from selling off their inheritance or losing it to creditors. It protects them from their own bad decisions. We are aware that there are DIY kits online where you can download a trust for $99. However, I want you to be so careful with those. Those templates aren't designed for your specific state laws, and they definitely don't give you the tax strategy you need. At NuTax Service, we don't just sell documents, we build legacies. We look at your tax bracket, your family dynamic, and your long-term goals. We help you with the little things that turn out to be big things like the P.O. box for privacy and the specific wording for your business interests. We believe that financial peace of mind shouldn't be a luxury, it should be the standard. Moreover, we make the process easy. We take the scary out of the legal talk and give it to you straight, just like we're doing today. We have covered a lot today, from the bucket metaphor to the importance of notarization and why a P.O. box is your best friend for privacy. I hope this video has demystified trusts for you and shown you that you are absolutely capable of taking this step. Stop leaving your future up to a judge. Take control, get your assets into a trust, and give your family the gift of a seamless transition. Consequently, you'll sleep much better at night knowing everything is handled. If you're ready to get started, or if you just have questions about your specific situation, the team at NuTax Service is ready to chat. Click the link in the description to book a consultation or visit our website to learn more about our trust packages. If you enjoyed this deep dive, please give this video a thumbs up. It really helps us reach more people who need this info. Subscribe to the channel for more wealth building tips and leave a comment below. I'm Claire with NuTax Service. Keep building, keep protecting, and I'll see you in the next video.